I think it's going to get more competitive in 2022. Hey, welcome back to another video. My name is Hans Struzyna with the Gunderman Group at Keller Williams Luxury International. Today we're talking about the loan limits here in Alameda County and why the fact that they went up makes things more competitive. If you get value out of this video, hit that thumbs up button and subscribe to the channel because I put out weekly content that gives you tips, tricks, ideas, anecdotes, stats, data, anything that I can pull together that helps you be more successful in the East Bay real estate market. That's what you're gonna find here on this channel. And if you want to have a conversation specifically about your situation, about your buy, your sell, whatever, hit me up down below. All of my information is down in the description of the video. So, loan limits. Every single county in the United States has one. They're all set by the FHA, Federal Housing Administration, and they're set by region. So Alameda, or actually the entire state of California just went up, but Alameda counties went up pretty drastically. In 2021, we were at a limit of $822,000. We just increased pretty substantially starting in 2022 up to $970,800. Huge increase, and I want to talk about that for a second. But first, before we get there, what is a conforming loan? Simply put, it is a criteria of a type of loan that has down payment, credit score, and debt to income requirements. It has to fit a certain mold so it can then be sold on the secondary market by Fannie Mae and Freddie Mac. So general characteristics for conforming loan limits are they have at least a 3% down payment. Around here, more often you're thinking 20 or more percent down. But if you're anywhere between 3 and 20%, you will have a private mortgage insurance on that. So talk to your lender about that one. But generally, they're also going to have requirements of a credit score of at least 620. But generally, if you're over 700 is when you start to get the better rates that are usually advertised. Lower credit score equals a higher rate. You're also going to have no or very low liquid reserve requirements, which is really big, and I'll get into that in a second. And generally speaking, you need a debt to income ratio of 50% or better. So this is not a loan product for everybody. This is a loan product for people who meet a fairly achievable but pretty specific requirement here locally. And frankly, almost all of my clients, almost everybody that I deal with in this price point in this county are seeking this type of financing, generally speaking. So this is why I think this is so important. When you look at the new loan limit having increased to $970,000, that means with a 20% down payment, you can afford a house, a purchase price that is of 1.2, or actually over 1.2 million, right? At 30% down, you're well into the 1.3 price point. Now back up and look at it from the perspective of 2021, that loan limit of $822 with a 20% down payment just notched you over the $1 million mark, and the 30% down payment put you at the 1.1 world, right? So it's a pretty big increase. What this has done is it is basically given people substantially more purchasing power for the same underwriting criteria. Because before, if you wanted to get a loan value over that 822, you went into jumbo. And one of the big factors of jumbo is reserve requirements. You're gonna have to hold a lot more cash in reserve, and you can't use it for closing costs or down payment because the lender is taking on a bigger risk, and they're gonna have requirement for you to be able to hold some cash in the event that something happens so you can pay them back, right? Conforming loans don't have that requirement, and now you're going to see people being able to put more of their cash on the table, not have to hold it in reserve, and obviously be able to push the price point up for that more desirable type of financing. Honestly, I think this just expanded the buyer pool pretty substantially in that million to about $1.4 million price point, which has been one of our more competitive price points here locally. And because of that expansion, because of that increase in the loan limit, because of all of that, I think this price point just got more competitive, the buyer pool got deeper, and you're gonna see a lot more competition here in 2022 as a result. Now, of course, there's a few other factors at play. that will speak to that. But when you're just talking about financing, assuming the interest rates don't jump up in a huge way, you're going to see a lot more competition in that price point, because now a lot more people can afford to get in that price point. Folks who just had that 20% down at the conforming loan limit, capped out, in the 1.1, 1.2 or below world. Now they're going to be able to get up into the 1.2, 1.3 price points more easily. So this will be something to watch. The behavior will be really interesting to see what the buyer pool does. And I think for sure it's going to open up that price point even a bit further and make it a little more competitive. So hopefully you got some value out of that. And since I know you did, go ahead and subscribe to the channel, hit the like button on this video, because I'm going to continue to put out content just like this every single week, and you are not going to want to miss it. So without any further ado, my name is Hans Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off for now. See you guys on the next one.